Flynn, and Phil mentioned the dollar highest in 3 months. That also has to be going into your strategy for investors in terms of how to invest.
It's a very interesting thing because the U.S. dollar, Maria, is commonly referred to as a way that's going to constrict U.S. earnings. It's going to slow U.S. earnings growth as they battle, exporting into a stronger dollar environment. The truth of it is, historically, it hasn't mattered as much as we fear. Like, even look at now, the market's holding in okay, even though the dollar's had one heck of a move over the course of the last year.
And it's impacted multinational earnings. So how do you want to allocate capital right here?
Maria, we're actually leaning into the fears, the piece we put out yesterday. The fear of Iran, the fear of China, the fear of Greece, all these fears that come into play of the geopolitical environment. The fear of the Fed, historically what that does is it creates a correction once the Fed raises interest rates. But that's because it's a surprise. This is the least surprising rate hike in the history of mankind. Right. So our view is that a lot of it's already been discounted by the average stock, like Apple's down 14% from its 52-week high. Yeah. So what we want to do is, on any weakness, or even now, we want to be buying the financials, we want to be buying the information technology, and we want to be buying consumer discretionary. Anything related to the expansion of credit and the millennial demographic. Those three areas, as you have a shortage of housing, are really going to push domestic economic activity.
And I think it was Dennis Lockhart, Sandra, from the Fed, who basically said the Fed will raise rates this September.
Yeah, and the latest CME Fed Funds Watch just looked at it. It still says that the probability of the first rate hike, it comes in December. It kept moving back. It was September, and now it's December, where a majority are predicting there as far as Fed Fund futures. But I think the worry, though, after they raise rates initially becomes, when are they going to raise rates again?
Yeah.
So I kind of fall in that camp of, we're going to get this knee-jerk reaction in the markets, and then there's going to be a recovery because everybody says, all right, we got it out of the way. But doesn't the speculation then turn to, all right, when's the next one coming?
It does, Sandra. And historically, Janet Yellen was actually asked the question, are you going to be like Ben Bernanke and raise rates at every single meeting? Yeah. And she said it'll be very different. We'll raise rates a couple of times, data dependent, of course, and then we'll reevaluate. So what I do is discount what anybody says, because ultimately it comes down to core inflation. Until you have a real problem with core inflation, you don't have to worry about a significant ramp in rates. And also, you could look at the Fed funds futures for January 2017, which you're saying that rates will be at 1%. So if you have predictability, at least on current market expectations, that rates will go up a little bit this year and then a little bit next year, I'm a little skeptical of that. So I think we have a little bit of the sloppiness we've had.
Right.
A great ramp into the end of the year. I'm almost near top on the street at 23.40 for this year.
Is that what's boosting this market? I mean, this morning we have pretty good performance. We're going to see a higher opening from the broader averages, notwithstanding Disney, which will cut about 50 points off the move. But what's behind this move, do you think?
Well, Lockhart yesterday said that they're going to raise rates in September. The only fear that's left out there that's not quantified is what happens when they raise rates.
Right.
All of a sudden, the market firmed up.
Yeah,
when he said that, the market
if rates are going higher for the right reasons, then I want to buy stock.
Yeah, exactly. And there's this sentiment out in the market that I'm sure you guys all hear, is that just get the Fed out of here. Like, let the markets function the way they're supposed to. And that unprecedented involvement that we've seen from the Fed has been bothersome to a lot of the free market.
Now, here's a generalization for the viewers. Okay, where should the Fed funds rate be is the big question. So how fast do they have to raise rates?
What's the natural level?
The natural level is core inflation is where Fed funds should be. So if the core PCE is at call it 1.2 to 1.5, that's where Fed funds should be. And the 10-year should be near nominal growth, which would be currently about 4 to 5%, somewhere in there. So you clearly do not need I don't have a ton of credibility on my Fed call because I've been thinking they should have raised rates in April. But clearly they need to go higher as long as you're not in this emergency zone, which you're just simply not in.
Yeah. All right, we'll keep watching that.